Creditors account, debit side. Creditors account, debit side. The next is cash account, credit side. In the cash account, by creditor, creditor account to cash. Okay. The next is received from customer. Received from customer means cash received from debtors. Debtors account, credit side. First you take debtors account, credit side. Debtors account, credit side by cash, and cash account, debit side to debtors. Okay. Each item is to be recorded twice. Clear? Come to the next. Next part is cash sale. This cash sale comes in the cash account debit side, two sales. Cash account debit side, two sale, and trading account credit side. Under the sale you have to take. Okay, two time. Cash, two places. One is in cash account debit side, two sales, and trading account credit side by sales. Under that you have to take. And bank balance at bank. Balance at bank comes in the bank account credit side. Closing balance is here. Okay. Opening balance is overdraft. That is also in the credit side. Bank opening balance is overdraft. Therefore, it is already in the credit side. And bank balance is there. Cash at bank means bank balance is there. So it also comes on the credit side. Bank account credit side by balance carried down. And this comes to balance sheet as bank balance. Balance sheet asset side, bank account credit side by balance carried down. This is the point. And next is cash on hand. Cash on hand, cash account credit side by balance carried down. And in the balance sheet asset side, cash 100 rupee. These are the items given. Then come to the assets and liabilities. Assets and liabilities. These assets and liabilities are to be recorded twice. This comes two times. First, stock. The stock, opening statement of his trading account. Opening stock, opening statement of here and trading account. Closing stock, trading account, balance sheet. Okay. Trading account and balance sheet. Then debtors. Debtors, opening debtors, closing. This is to balance brought down. This is by balance carried down. First case. And secondly, the opening comes in the opening statement of phase and closing comes in the closing statement of phase. 4 times you have to record it. Next, same, the creditor. Opening balance, by balance brought down. Closing balance, to balance carried down. Creditor's account. Then opening comes in the opening statement of phase, closing comes in the closing balance sheet. So creditor and debtor, creditor, debtor recorded 4 times. 4 times. Remember this. Machinery, opening statement of phase, closing machinery, closing statement of phase. If there is adjustment, you have to make it in the balance sheet. The next is furniture. Opening statement of fair, closing balance sheet. Next is make provision for doubtful debt at 5% on debtors. Provision for doubtful debt first comes in the P&L account. Then you have to take in the balance sheet, asset side, deduct in the debtors, deduct in the closing debtors. Depreciation machinery 20%. Depreciation of machinery 20% is 2,000. 20,000 is machinery. On this 20%, first comes in the P&L account. First record in the P&L account, then record in the balance sheet, asset side under the machinery. You deduct in the machinery. Okay. Then manager is entitled to a commission at 5%. 5% commission on the net profit. Net profit. Commission is 5% on the net profit. Net profit after charging such commission. After charging commission, whatever remains on that 5% commission is there. It is complicated. Suppose 100 is the net profit. Suppose 100 is the net profit, 5% commission is there. So 100 is the net profit, 5% means 5 rupee. 5 rupees is the commission. Okay. Before this, before the adjustment of commission, net profit plus commission share should be 105. For every 105 net profit before commission, for every 105 net profit before commission, 100 is the net profit, 5 is the commission. So you have to split 105 into 5 as commission, 100 as net profit. I'll show it while solving the problem. Okay. Now I'll prepare the accounts. Okay. First, I'll prepare the statement of affairs. Statement of affairs is to be prepared on the basis of opening balances. You see here, the opening balance of stock is there, debtor is there, creditor, machinery, furniture are there here. But opening balance of cash, sometimes they give in the cash information. You have to see in the cash information. In this information, asset and liability, bank balance is not given. Bank balance is given above as overdraft, opening overdraft. So that is to be considered. Not only these assets and liabilities, along with second point, asset and liability, one opening balance is given at the starting. That is also to be considered, and you have to be careful. You have to very conscious regarding all the items. Okay. Now you see the statement of affairs. Statement of affairs. Opening statement of affairs. I forget to change the date. I copied this date. Okay. 1/10/1983 is the date. Correct it is. I have taken the correct date. Then I'll enter one by one from the assets and liabilities. First is opening is bank overdraft. Bank overdraft is the starting. You take that bank overdraft. Amount is 7,400. Okay. Then you take the opening balances from the asset and liability. Opening balances from the asset and liability. First is stock is there. Okay. Opening stock is 22,000. Next opening balance is debtors. Debtors is 53,000. Okay. I am taking from the asset and liability balances. Second point, Roman 2. Then third is creditor. Creditor is 15,000. Okay. The next is machinery. Machinery is 20,000. Machinery 20,000. You take the machinery 20,000. The next item is furniture. Furniture is 1,400. Furniture is 1,400. These are the assets and liabilities. 1, 2, 3, 4, 5. 5 items are taken from the second head, asset and liability. Bank overdraft is taken from the starting itself. Okay, you have to see where are the opening balances. You have to take all the opening balances of asset and liabilities or expense. If there is a opening balance of expense is called as outstanding. Okay, all the opening balances are to be taken in this statement of affairs. You have to search the problem fully. First point is completed. I'll go to the next slide for the cash account and bank account. I'll prepare the cash account and bank account. Separately, I will prepare. It is easy for you people. Columnar form may be confusing, so I'll take the common. Sorry, separately. It is the cash account. Then second is the bank account. Okay, cash account, bank account. First, I'll enter the opening balance and closing balance. First, you enter balances. First balance bank account is by balance brought down. It is starting item is there. Starting 7,400. 7,400 amount it is over up. Okay, opening 110. 110 is opening balance, bank overdraft given in the problem. By balance brought down, it is a liability. Remember this. Bank overdraft is a liability. So it is credit side balance. It is credit side balance. Then I will take the opening balance and closing balances. Otherwise, I'll enter the starting from the first. By balance brought down, sorry, by drawing is there, second item, 3,000. Next, by manager salary. Manager salary is a payment, you record on the payment side, 4,500. Next is staff salary. Staff salary you record on the payment side of the cash book, 3,500. Next is trade expense. Serial you come from the top to bottom. Serial you come from top to bottom, which are cash transactions you record in the cash book, cash account or bank account. If it is related with bank, you record in the bank. If it is related with cash, you record in the cash. Top to bottom you come. Trade expense 2,000. Okay. After the trade expense, there is a wages. Wages is also payment. Okay, payment 15,500. Next is cash paid to creditor is there. Cash paid to creditor by creditor. Debtors and creditors account. No other items are there. From the first to the last. From the first to the last you come. There are only two items relating to debtors and creditors. One is related to creditors. That is cash paid to creditor. Cash paid to creditor. Second is related with cash collected from debtor. Two items are related with debtors. I entered the two items. Okay, it is completed. The debtors and creditors account entry is completed. Okay, all the entries are completed. Now we have to find the missing information. You have to find the missing information. I will start the finding of missing information. Okay, first I take the total of creditor account. Creditor account total is 44,500. Debit side 44,500. Then difference is 29,500. 29,500 is the difference. What is this 29,500? You have to give a name for this. You have to give a name to it. What is the name for this?
Credit purchase.
Someone is telling. You have to give a name. What are the important items? Credit side of the creditor account. What are the items coming on the credit side of the creditor account? Credit purchase. Good. Credit purchase. Very good. Credit purchase. Okay. It is clear. Then come to the debtors account. You close the debtors account. Debtors account total is 1,48,000. Okay. Credit side total is 1,48,000. 1,48,000 is the debit side total. Then difference already recorded. I recorded the debt credit sale. Okay. By mistake, I recorded it as credit sale instead of I have to record amount first. Okay. The difference of the debtors account debit side important item is credit sale. Clear? Credit sale. Two accounts completed. Then I go to cash book. I go to cash book. In the cash book, I will close the bank account. Remember, you have to close bank account first. In these two accounts, you have to close bank account first. Remember, I will close the bank account. Bank account total is 11,400. 11,400. Debit side 11,400. Please mute your audio and video. Please mute your video and audio. Whenever you want to interact with me, you on your audio or video, and soon after interaction, you off the audio video. 11,400 is the difference. Then this 11,400, whatever difference comes in the bank account, that is to be made contra entry. You have to make contra entry regarding bank account. Whenever you close the bank account is to be made contra entry. 11,400 in the bank account you write as 2 cash. In the bank account you write as 2 cash. In the debit side, it is to be made contra entry. Debit side of bank account goes to credit side of cash account. 11,400. This is called as to buy bank. This is contra entry. Okay, always remember, while closing the cash and bank account, first close bank account and make it contra entry. Clear? Then close the cash account. The cash account total of the credit side is 65,000. Debit side total is also 65,000. There is no difference. There is no difference means there is no opening balance. Opening balance of the cash is 0. Opening balance of cash is 0. Clear? I close the cash account. Now I go to statement of affairs. I go to statement of affairs. In the statement of affairs, these are the items. These are the items. And no other items I have taken. Okay. All the items recorded. And you close this account. Sorry, you have to take the balance of cash and bank. I forget to take these two. Remember this. Okay. I told that there is no other items. Close. If you close this account, if you close this statement of affairs, your answer will be wrong. Your answer will be wrong. Why? You have recorded the opening balances. Okay. You have recorded the opening balances. And all the opening balances are recorded. And I think there is a mistake in this. Okay, these are the items. There are no other items. There are no other opening balances. There are no other opening balances. You close this cash book. You have to check once again. Is there any opening balances? You have to see cash book. In the cash book, opening balance of cash is 0. Opening balance of cash is 0. You may record that as cash 0. Previously I recorded cash 0. I deleted that item. Bank balance is 4 down. Close this. 96,400 is total. Then difference is 74,000. This 74,000 is called as capital. Okay, capital. This is called as capital. Now we prepare the trading profit and loss account and balance sheet. Okay. So this is the first step. This is the first step. We ascertain the missing information. We are preparation of final accounts. Okay. You see the trading profit and loss account. The trading profit and loss account for the year ending. First you take the opening stock. Opening stock from the opening statement of affairs. You take from the opening statement of affairs. 22,000. Second item, purchases. First you take credit purchase from the creditor account. Credit purchase from creditor account. Second, cash purchase from the cash book. There is no cash purchase. There is no cash purchase. You take this as the purchase. 29,500. Next is wages. Okay. Cash to purchase only 29,500. Only credit purchase is there. There is no purchase in the cash account. Next wages amount is 15,500. Sorry, I forget to adjust it. You see here, I'll enter the all the items and show you. Opening stock 22,000, purchases 29,500, wages 15,500. The next is salary. Sorry, sales. Sales, credit sale from the debtors account, cash sale from the cash sale from the cash book. You take these two and take the total. Total is 1 lakh. Then closing stock from trading account, closing balance 19,000. Close the accounts, 1,19,000 is the total, 1,19,000 total, 52,000 is the gross profit. 52,000 is the gross profit. Okay. Then by gross profit 52,000. By gross profit 52,000. Then you take the items. You take the items from the accounts, whatever accounts you prepared. One is cash book, the second is bank, third is debtors, creditors. From the accounts credit side, nominal accounts, credit side of the accounts, there are expenses you take in the debit side. First is manager salary. Second is office staff salary. The next is trade expense. These are in the cash account credit side. Then I'll take the reserve for doubtful debt. Reserve for doubtful debt, they are informed to calculate, that is 5%. 5% of debt, 5% of debtors. Debtors closing balance is 88,000. On that 88,000, you calculate 5%, that is 4,400. Then depreciation on plant and machinery. Depreciation is 4,000. Okay. Depreciation 20% they asked, 20% on machinery. Machinery 20,000, 20% of 20,000 is 4,000. Okay, depreciation. And next adjustment is very important. That is the manager commission. Manager commission is 5% on the net profit after charging that commission. Okay. So all the entries I made, and 2 entries are remained. Only last 2 entries I have to make. One is manager commission, second is net profit. These 2 items left. Okay, these 2 items left. Therefore, I will close the account and ascertain the profit. I will close the account and ascertain the profit. Whatever profit comes in this stage, is called as profit before commission. Profit before commission. And that is to be taken for calculation of commission. Okay, you see here, manager commission. Manager commission is equal to 33,600 into 5 divided by 105. You see here how I calculated this. This is the information. Okay. Remaining items are 2. One is net profit, another is manager commission. Leaving the 2, I close the account. Total is 52,000. Now I take the manager commission. manager commission debit side, and I'll take the difference of these two. Total is 52,000, and total of this is, I think it is 4,500, 7,000, 8,000, 10,000, 18,400. 18,400 is the total. Okay, 18,400 is total. Sorry, 8, 10, 18,400 total. 18,400 is to be deducted from this. 52,000 minus 18,400. 18,400 you deduct, whatever comes as 33,600. 33,600 is the profit. 33,600 is the profit before commission. Okay, 5% is the commission. You write 5 rupees commission divided by 100 on net profit. But it is 33,600 is profit plus commission. Therefore, profit plus commission is 105. For every 100 rupee profit, 5 is the commission. Total of that is 105. Remember this point. For every 105 total commission plus profit, 5 is the commission. But for 33,600 total profit before commission, what is the commission? Commission is 1,600. Now commission is 1,600. Then difference you calculate. The difference is called as net profit. The difference is the net profit. Okay, this is the net profit. Now we prepare the balance sheet. Now we prepare the balance sheet. This is the balance sheet. 30th September. I do not know the name. First you take the opening capital. Opening capital is 74,000. Add net profit 32,000. Total is 1,06,000. Less drawing. Drawing is 3,000 in the cash book. Your drawing less 3,000. The balance is 1,03,000. 1,03,000. Next, you take the creditor account closing balance. Creditor account closing balance is 19,500. Okay, 19,500. Then come to the next item. Outstanding commission, manager commission. Outstanding commission, manager commission not yet paid. So you take, this is outstanding commission, manager commission, 1,600. These are the 3 items coming on the liability side. Come to the asset side. Debtors you take inner column, less RDD. Less RDD, 4,400, balance is 83,600. Next, cash. Cash balance from the cash book, 100. Bank balance from the bank account, 4,000 closing balance. Stock closing is 19,000. Plant and machinery, take inner column 20,000. Less depreciation, 4,000. Total balance is 16,000. Then furniture, there is no difference, 1,400. Take the total. Total is 1,24,100. 1,24,100. This is the point. Okay.